Well, good afternoon, everybody, and warm welcome to our webinar. This is the 12th edition of the Allianz Risk Barometer, and I hope you can hear me clearly. Maybe if Ludovic cannot because his camera's on, you can hear me. Oh, fantastic. Okay, so talking about Ludovic, he's our main panelist this afternoon, and he is our chief economist of Allianz, based in Paris. And welcome, Ludovic.
Thank you, Thusang. Pleasure to be here.
Fantastic. And on the ground, we have Ronald Dodo-Tabaziva. He's our head of property. We have Santho Mohapeloa. He's our lead cyber underwriter. And then we have Senzile Ndlozi, our business development manager. Also assisting the team this morning, we have also Kevin Barnes, our chief financial officer. And also we have Daniel Schroeder, who's our senior risk engineer. They can quickly say hello. Okay, I saw a wave from Senzile. I didn't hear hello from anybody else.
Hi,
Hello, everyone.
Good afternoon, everyone. Ronald here.
Fantastic. We see some proof of life. Fantastic. Okay, so quick methodology of the risk barometer. Some of you have read the report, and the 2013 version, basically, we have seen a number of respondents, 2,712 from 94 countries and territories, which is a record for our report. And also, of course, in Africa as well, we have 13 countries represented in our report, including 23 industry sectors. Our respondents vary from our Allianz customers in terms of size. We have a large, mid-size and small businesses, especially risk managers. And also we have our brokers and also industry trade organization. Essentially, with the survey, we just want, the purpose is to identify the top 3 most important risks that the clients feel are important, and then we run the survey between the month of October and November. And I'm going to quickly go through the global results. I'm going to sort of blend them with the African Middle East, so to save time, so that we can have a deep dive properly on the risks that have been identified. So the top risk, as we all know, it's cyber. Cyber remains the #1 risk for the second time in a row. This is no surprise that is the biggest worry for clients as we live in an interconnected world. And we're also seeing that cyber is #2 in Africa and Middle East, which used to be #1 the prior year. But Santho will do a deep dive on this later on. The second biggest risk globally is business interruption and supply chain disruption. And it is also the third biggest risk in Africa and the Middle East. And Ronald, our property expert, will also do a deep dive on that later on. The third risk, which is #1 in Africa and Middle East, is macroeconomic development. And hence we have Ludovic Subran, who will be taking us through this key risk, which has jumped globally from number 10 to number 3. And it's the highest position since 2012. And it's such a key risk, and we look forward to the insights from Ludovic on that. Quickly, the new entrants in the top 10 globally, we have the energy crisis at number 4, driven by the aftermath of COVID-19, and also this exacerbated by the effects of the Russia's invasion of Ukraine. Also new in the top 10 for Africa and Middle East is energy crisis. And the other one is political risk and violence, which is another new entry in the top 10 globally, which moved from 13 to number 10. And also in Africa, as we know, it's always been on our top 10, on the radar, and the top 10 is ranked number 6. Other risks, which are no surprises in the top 10, include changes in regulation and in legislation, both ranked globally and in Africa and Middle East at number 5. And Nat Cat is globally ranked at number 3, which is ranked number 6, moving from number 3 to number 6, meaning that a lot of our clients or risk experts feel probably distracted with the macroeconomic development issues, but Nat Cat's still a concern. Climate change is number 7 globally. The impact of global warming is still a worry for a lot of our respondents, and it's ranked number 4 in Africa and the Middle East. Senzile will touch on this later on. And also quickly, at number 8, we have the shortage of skilled workforces at number 8, moving from number 9. And at number 9, we have the fire and explosion. The new risks in the top 10 for Africa and Middle East include theft, fraud, and corruption. If you can move the slides just to make sure that people can see what we're talking about, because we're still on the one slide, unless my screen is delayed. Can everybody see can we have the top 10 risks? Yeah, you can leave it there, that's great. One slide back. Apologies for the delay. There's been a bit of a delay in terms of the slides, but hopefully we'll get it right when we do the deep dive. But at number 8 and number 1 actually in South Africa, but number 8 in Africa is the critical infrastructure blackouts or failures, which is a first time a top risk in South Africa. So we look forward to more insights on that from Ronald. And yeah, that's a very quick fly through the top 10 risks globally and Africa and Middle East. And there's a bit of snorkeling, but now we got to do a deep dive into the key risks. We do ask you to participate. We don't want this to be a monologue, so please use the chat function on the right hand side of your bottom side of your screen and pose as many questions as you can. So I would like to now hand over to the Rolls Royce of our speakers, the Chief Economist of Allianz, Ludovic Subran. Over to you, Ludovic.
Thank you, Thusang, and hello, everybody. I would like, if possible, to go back to the risk list. And I know the slides are a bit slow today, but because I think it's very interesting to see, to complement what you just said, Thusang, I was very surprised by some of the results this time. So if you don't mind moving back to the top risk slide. Yeah, one more. Sorry, the slides are acting up. That should be the top risk 24. Okay, so you know what? It doesn't want to, so maybe I just switched to a. No, so the reason why I wanted to show this is because I think there are very interesting upside down moments. You mentioned macroeconomic risk, Thusang, that is in the top risk globally. That is number 1 risk in Africa, and that's why I'm going to talk especially why there is this crystallization of risk. But I thought what was interesting also was the fact that Africa has been used to energy crisis and can teach a thing or two to Europe, which is very affected by the upcoming risk of energy crisis in top 4, but also because we have in the risk list in Africa a much stronger focus on climate than in the global ranking. And I think this is really something worth noting. I think it's because of the agricultural sector in Africa, maybe because of the COP. But I was very, disappointed, I would say, that companies in the north have been actually putting climate change on the back burner when those are really intricate, the energy and climate crisis. And so I was quite positively surprised that the focus of the African businesses to tackle the unfortunate consequences of climate change is still very high on the agenda of the 500 corporates or so that were interviewed for this risk barometer on the continent. So as mentioned, one of the big issue of this year is indeed the fact that, especially for the African continent, macroeconomic development has been topping the list of risks. I think this is important in 3 ways. First, because I think there is this lower growth, higher inflation, higher financing cost environment globally, and these have consequences on the African continent. Secondly, because the African continent has a few hotspots this year, some very strong elections. The next ones are, of course, the Nigerian elections. People are still trying to understand how Africa is gonna, and we know it's very different countries, but how Africa is gonna find some form of balance between net commodity exporters that are having a very strong ride and net commodity importers that are still suffering from additional vulnerabilities from the imported inflation. And third, I believe that there is this one of the reasons why the African corporates are particularly focused on the macroeconomic development is because there's been some embedded resilience, which is new and which needs to be called for. And I will come to that in a minute. I was personally very positively surprised by the relative resilience of currencies on the continent and by the very strong push by central banks on the continent to be ahead of the curve. And I think this is something that is not said enough in the positive storytelling of Africa, but there's been policymakers have shown quite some, strong response to the deteriorating capital markets and economic environment. And so maybe corporates are skeptical about this continuing in the future, but so far it has proven quite positive, I would say net positive for the continent. So if you go to the next slide, here you will find our growth and inflation forecasts for the big countries on the continent. So we expect Africa to grow positively in 23 and 24 compared to our expectation right now that some of the countries in the Northern Hemisphere will be in recession or growing zero. We expect, however, quite high inflation. And remember, it's not because inflation peaks that prices peak, right? So even if in 24 we have only 14% inflation, remember it's always on top in terms of price development. And so this picture is quite important. Why? Because we have quite solid growth in most African countries, mostly driven by net commodity exporters, the Angolas, the Mozambique, the Nigeria, the Ghana, and to that extent also the South Africa of this world. But we also quite some strong overheating and the risks of social unrest coming from that. I would highlight here Ghana, but I could also highlight here Egypt and some other countries like Nigeria, of course, or even Angola, where I think the inflation level are still not okay when it comes to the risks of social unrest and political risk more broadly that it incurs from this macroeconomic development. I also, and if you move to the next slide, I also think one topic that I would like to address today, and I'm sorry the slide is a bit complex on the first side, is the story about cascading default risk on the African continent. I think one of the reasons why corporates on the continent have been highlighting macroeconomic development as a key risk for the continent is the worry about country risk, and especially about default risk by sovereigns, with what just happened over the past couple of years, you know, from Zambia to Ghana, all the way to some of the concerns that have been piling up in other countries in the region, and of course the default wave more generally from Ecuador to Sri Lanka in the world. On that slide, so I won't go into the details, but basically we provide a score of concern for us on public debt sustainability. Remember, I think, you know, most African economies have not necessarily burned as much cash as Northern Hemisphere countries when it comes to fighting COVID, even though they've been disproportionately affected as the livelihoods of so many people were put on hold as the world was pausing. But of course, you know, the pre-existing conditions were something to watch for, and the normalization, the big US financial vortex and the very fast normalization of central banks in Europe, in the US, in Asia have actually caused this, you know, risk that the overheating from the recovery, I would say the global recovery of 2021, ends up in 22 and now in 23 in a difficult wake-up call for some of these countries for whom the capital flows are exiting, or at least on the outflow side, who still have to increase much more the interest rates to be able to fight inflation the right way, and of course, which have been riddled with problematic public debt sustainability issues. So what you have here is the ranking. You have on the continent 12, so almost half of the vulnerable countries in the world when it comes to risks of default. So you have Zambia, Malawi, Ghana, Egypt, Kenya in the top 10. And then you have a few Middle East countries. South Africa is number 13 on this unfortunate ranking. And then you have Uganda in number 16. So this is important to keep in mind. Why? Because we know that the sovereign risk often affects the state-owned enterprises, and the sovereign risk also affects the overall confidence for the corporate sector to be able to invest, to be able to operate, especially when we're talking about foreign subsidiaries or when we're talking about companies that have a Pan-African reach. So this is really something we need to keep in mind. We will watch that very strongly. We still think that there are buffers and coping mechanisms that could be triggered. So it's not a fatalist view. It's just a watch list that needs to be high on the agenda of business makers for 23 and 24, with a repayment wall which is particularly acute in 24. So remember, that doesn't mean that these countries are going to default in the next 3 months, 6 months, but that means that the vulnerability is there, and the hazard, or what could cause the default and therefore compromises or creates a bit of a bullwhip effect on corporates, could be down into 24. And so that's why some of the remedial actions need to be taken as early as now. If you go to the next slide, I just wanted to highlight what I just said in the introduction. The currency resilience, the African currency's resilience, is massive if you compare to 2013 and 15. I think this goes without saying that this is because of what has been happening on the right-hand side. So on the left-hand side, you see that apart from Angola, most of the currencies and maybe Algeria, which are commodity exporters, most of the currencies of the large countries on the continent have been depreciating 5 to 10%. Remember, this is really very much what the euro has depreciated to the US dollar. So that shows that there is an exorbitant privilege of the North when it comes to handling this crisis, because there is the credibility and the signature of some of the situation, I would say, or some of the ability of some of the central banks to print money to encourage a form of signature. But I was very surprised by this relative resilience on the currency front after having had a very volatile currency environment. And this is quite good, I would say, for corporates in these countries. It also means that we need to keep that in mind going forward, because the reason for this resilience is due to what is on the right-hand side, which is the interest rate, the very fast interest rate increases that central banks in the countries have been doing. Why? Because I don't think they're over. And so that could compromise, that could, affect negatively the financing environment in which corporates on the continent will be growing. So as you can see here, we have a lot of central banks that have interest rates above 10%, key interest rates. And so remember that if they continue to increase the price of credit, but to a certain extent also the availability of credit, will become a challenge to finance capex growth in some of the countries of the continent. So we need to keep that in mind, that there is a fine line here between making sure that inflation targeting is credible, and also avoiding to have lower growth because of very tight or too tight credit growth in some of these economies, especially for the good companies that are trying really to grow the pie for themselves. If you go to the next slide, here you have a bit of the relationship between the macro risk and the social risk through the food inflation. As you know, the food crisis scare of 22, based on the Black Sea wheat exports to the Middle East region, we've managed that somehow. But what we see now is a very different food crisis, which is related to the long tail effect of the energy price inflation into the food price inflation, which continues to be quite strong. So it's not an availability crisis, it's more of an access crisis. And you see that 11 emerging markets are particularly at risk of a food crisis due to price, so due to the cost of food, not availability of food, which requires special safety net, which requires special market clearing mechanism, and which certainly requires some certain policy making. And here you find, among others, Egypt and Tunisia, Turkey, Pakistan, Lebanon, Algeria, and in the continent, Nigeria. So we really want to keep that in mind. Also Ethiopia, and you see the graph on the left-hand side, where both Ethiopia and Egypt, but also together with Nigeria, have experienced very strong increases. In Tunisia, I've experienced very strong increases in food prices. Remember that this is a major cause for looting. The Arab Springs of Tunisia started on the back of the cost of living crisis on the continent. And this is something where, for now, we are just modeling the effects that are already in the system. But remember that any natural catastrophe in the Horn, any form of additional tariffs or additional protectionism, or just the sheer return to more growth on the cereal consumptions from Asia, for example, could create a bit more disruptions, and with the consequences we know when it comes to social unrest in some of the countries in the continent, and the business interruption risk to corporates operating in those sectors. If you go to the next slide, this is I just mentioned this higher food consumption coming from Asia. I think one story in the short term that we need to watch for is whether the Chinese reopening is net positive for the continent or not. What we've tried to show here is this idea that the continent would be benefiting, certainly on average, from the Chinese reopening after the record absenteeism and the tragic COVID wave that affected China. The reopening is strong, is very publicly supported. And so that does mean that there will be a positive price effect. It's very good for commodity exporters from Nigeria to South Africa. Outside of the continent, Latin America is very strongly benefiting from this. But remember, these additional energy or mineral commodities or food commodities price pressure are not distributionally all good for all the countries on the continent, because you have net importers of these commodities. And so we always need to make sure that we keep in mind, and this is mostly on the metals and minerals, but you could also do the same analogy with food commodities, that this is the price differentials is good on average for the continent, but remains a big issue as some countries on the continent are net importers. If you go to the next slide, you see also some of the additional concerns that I have as an economist. For example, I just focus on the last part of the chart, is if you just look at South Africa, which should be a net benefitor of the reopening of China, or at least that's what market participants are believing right now, we haven't seen industrial production pick up as fast. If you compare to the very recent 2021 reopening, it's very interesting to see the sluggishness of investments, of production in countries like South Africa, in spite of the pricing in of future demand, reopening, especially from some of the countries that are exiting or avoiding a recession, or tiptoeing outside the recession, or some of the countries like China that are supposed to reopen fast. And so that is very interesting, because it's not that the transmission mechanisms are broken, just means that it takes time to really see the benefit, and it takes a series of good measures to fully harness the benefits of such reopening, including when you are a net commodity exporter. In the case of South Africa, we were just joking about that, or half joking about that when we were connecting. The power cuts are still a big impediment to seeing the full-fledged transmission of South Africa being well positioned to harness the full Chinese reopening. And this is something that we need to continue to keep in mind, because these are the type of risks that most of the corporates have been ranking as high in this year's barometers, which is the structural environment topics that are so important to growth, and that could sometimes be such a risk that it is an impediment to grow. I think there is one more slide when it comes to my part before I hand over, which is on the energy crisis. So that's a nice transition with what I just mentioned about power cuts and load shedding, and harnessing really the dividend of the Chinese reopening for net commodity exporters like South Africa. I think the energy crisis has been a hackneyed topic, at least in the risk barometer, because it made a big entrance in the European world. This is quite new. To even look when you enter a room or when you travel to a country, to look at where the energy is coming from, what are the pipes, who is the provider, where is the dependency. I think that there is still a big question mark about the ability of Europe to deliver on its energy transition. Right now, there's been a lot of money spent to avoid the negative effects of the energy crisis on the people and now on the companies of Europe, but there is no visible expansion on the sources of energy from renewable energy. I think in Africa it's a different situation, but there are some revival of some of the topics that were high on the agenda already. A lot of African economies have been suffering from an infrastructure gap ranging in the tune of 5 to 15 billion investment gap for the energy infrastructure, especially the downstream grid. If you total for the full continent. If you add the green infra gap, so the one that needs to happen to increase the renewable energy investment needed to get onto the net zero pathway, we're talking about 3 times this amount. And suddenly, one thing that I mentioned on the utilities, you've seen maybe some of the political risk component is huge. It's very interesting because when people talk about Africa, there is always this corruption, political risk. But if I look at Europe last year, 2 major utilities companies were just bought back, right, in France and Germany. So I don't know who is more riddled by political risk in 22 and when there is an energy crisis. This is a very interesting moment, because I think more generally, a lot of the agenda when it comes to critical infrastructure liberalization is coming to an end fast, at least on my continent. And people are seeing that there needs to be a different form of public-private partnership. I think the continent has been, seen or regarded as not being able to stabilize some of its energy infrastructure. And so, I remember, Senegal, for example, with Senzile being always, looked down for not being able to deliver a functioning utility. Just look at what is happening in the north. That are 2 warning calls. The first one is the risk of nationalization and therefore of pure political risk, as it confiscation and expropriation is strong and is, clearly coming from the north and not from the south. And so this is something we need to keep in mind as this energy crisis continue. And the second is, of course, the regulatory backlash, and more generally in the environment of what I said before, which is, this climate and energy nexus. We still need much more public investment. We still need much more private investment to make sure the energy infrastructure and more generally the critical infrastructure are climate proof, but also I would say are crisis proof. And this is a big opportunity for growth. We've seen that with COVID when the world closed on trade infrastructure. We see that now with blackout risk with the energy infrastructure. We will see that tomorrow with telecom or with green or whatnot. It is something we need to keep in mind going forward, because I think there is a new recipe to find. And clearly the insurance sector is there to contribute both as an investor and as an underwriter to developing these local solutions. And I expect that the African continent will show us a lot of the way forward because of the potential for innovation and leapfrogging some of the problems we've had in bulletproofing, I would say, some of this critical infrastructure. I would stop here now, and I will hand over back to Thusang for the next speaker on cyber incidents. Thank you very much.
Yes, we'll shoot. Thank you so much, Ludovic. We'll shoot straight to Santho Mohapeloa. There you can go ahead, Santho. Let's just test your sound there, Santho. I don't think you're coming through. Can't hear you yet.
Everybody.
There you go.
Hey,
we can hear you. Yeah.
Hey, everybody. Cyber has remained number 1 in terms of the business risk in 2023, second year in a row. It's also number 1 business risk in 2023 in 19 countries, including Madagascar, Mauritius, Morocco. Second in Kenya, South Africa, and third in Nigeria. We've seen a recent spike in claims and attacks in the SME space, as well as in the corporate and larger entities, and also multinational space. Businesses are often impacted by cyber attacks, and there's still a growing trend in South Africa not to disclose, even though obviously legislation promotes disclosure of these attacks. However, the practice is still ongoing locally. The affected areas or industries remain entertainment as number one. Financial services, we've seen a lot of ransomware attacks, banking trojans within the financial services. So financial services remains as a target risk for these cyber criminals. Media, large telecommunications companies and technology companies, large utilities. Next, please. The ransomware pandemic, unfortunately, still carries on. The cost of ransomware attack has increased drastically due to the cyber criminals attacking large companies, multinationals, critical infrastructure, and as well as supply chain attacks. The attacks are sparing and they are random. They're not focused particularly on the SME sector and are general. And we've seen, as I said, we've seen spikes in the large entities, multinationals, as well as supply chains. Ransomware as a service has increased the cost of claims and the severity as well as frequency of claims. We found that ransomware as a service has been commercialized. There's readily and available toolkits on the dark web and on the net that one can use and acquire to facilitate these attacks. It's not very sophisticated, as we've seen. There's been kids and children from the likes of 12 who've committed some of these attacks. So definitely the rise and the purchase of ransomware tools on the dark web has increased. Multiple extortions. We've seen extortion attacks increase. Not only is it double extortion attacks, we've seen triple extortion attacks as well. Not only is the systems encrypted, however, there is also the fact that we see that cyber criminals are using more the sensitive data to attack and extort your business partners, your service providers, your clients. So definitely the extortion element of the ransomware pandemic has definitely increased and is heightened. Supply chain attacks have also increased. We've seen the use of large technology companies being targeted by cyber criminals. Obviously, the use of these large tech companies makes the attacks surface or space larger. So definitely they can spread their malware programs and ransomware attack programs widely. Ransomware forecasts 30 billion in damages to global organizations by 2023. This will increase definitely in the last quarter. As we've seen historically, these incidences tend to increase in the last quarter. Next, please. Cybersecurity resilience remains as a major concern within the ESG risk trends. Ensuring that your company is ready and can withstand attacks, and ensuring that your company has a proper or adequate cyber posture will assist definitely with ensuring your strong ESG position. Regulatory exposure and litigation, we've seen that due to increased legislation and regulations, there's been a tightening of requirements contractually worldwide. We find that most insurers are compelling other entities to contractually to have the cover, and they're also compelling such entities, or they are reviewing the security systems of the parties or companies that they deal with. There's a potential of more cybersecurity requirements legislation worldwide, even locally. we've seen an improvement in terms of risk posture and risk quality locally due to the enactment of the of privacy and local data laws. So definitely that has been an improvement locally, and we're looking at more improvements as we go along due to the stringent regulation and legislation. Class action suits, we seem to be following the American trend in terms of class action suits. Data breaches are all at an all-time high, with an average cost of a data breach amounting to $5 million worldwide, and network security failures have also increased the exposures drastically. Nations state-sponsored attacks are on the rise. Ransomware attacks have established temporarily due to sanctions. We've seen a stabilization of these in the first quarter. However, like I said, traditionally in the third and fourth quarter, there will be a spike in attacks and in ransomware attacks. Due to sanctions and regulations in terms of ransomware, there is a fear that there will be a shift to say in terms of the cyber criminals. The ransomware is seemingly becoming less profitable, so there is a fear that they will move on to different tactics. State-sponsored attacks increasing given the current geopolitical situation, and the risks from politically motivated hackers and groups and hacktivists has increased, even though this is really difficult in practice to prove and to track. But due to geopolitical tensions, there is definitely an increase in respect of nation-sponsored attacks.
Thank you, Santho. I'm assuming you've handed over to me.
Yeah, Senzile, it's your turn. But I just wanted
Thank you very much.
just to come in before you take over. Just want to encourage the participants to post any questions they may have. There is a Q&A section. If you look on either the three dots on your screen, it should take you to the option of the chat function, or the question mark should actually take you to the Q&A side of the screen. And please post questions on there. Thank you. Over to you, Senzile.
Thank you so much, Ms. Mahlangu. So my deep dive topic is on climate change. So basically, climate change is ranked number 2 in Mauritius, Namibia, and Tanzania, number 3 in Kenya, and number 4 in Africa and the Middle East. Globally, climate change is ranked number 7 in the Allianz Risk Barometer. Now, what's interesting about this ranking is that in 2022, climate change was ranked number 6. So it's fallen 1 place. Now, the reason behind the fall is quite interesting, because I think there's a general perception amongst business that there are more pressing issues happening around the world, more particularly on the landscape, on the risk landscape. There's a lot of economic and geographical uncertainties. However, climate-related incidences remain as important as they have been from day one. If you imagine it, there is events such as the Hurricane Ian in the USA that took place in 2022. We had floods in Southeast Asia and Australia. We also had winter storms in Europe and the US. We had severe heat waves all over the world. We even had record-breaking hailstorms in France, tropical storms in East and Southern Africa, as well as we had a drought in the Horn of Africa, which forced many families from Djibouti, Kenya, Ethiopia, Somalia, to leave their homes in search of food and water. Last but not least, we even had the widespread flooding here in South Africa, which killed almost 500 people and displaced more than 40,000. The question that we asked in the survey was, how was climate change impacting companies? Well, climate change and global warming are threatening companies in a number of ways. Number 1, they're increasing the number of property damage and business interruption risks. They're also increasing the number of legal threats and liability risks due to the very good regulatory laws that we have all over the world. They're also increasing the disclosure requirements for companies and the threat of greenwashing and climate-related lawsuits. So companies now have to think of a whole wide range of risks that previously they hadn't thought of. The other option, the other interesting thing or dimensional risk that companies need to start thinking about is they also are confronted by an increasing number of transformational risks. That essentially means that they need to think about new market conditions and product requirements, and are even having to make changes to their overall business strategy. I was reading recently, there's an article, and I think Ludovic can confirm for me that European companies, automotive companies, have been given until 2035 to move into the energy sector. Maybe Ludovic can share that a bit later, but it's a deadline that they've been given, and it's something that companies need to look at and perhaps reflect on their business strategies going forward. According to the survey, the top 3 actions companies are taking to combat the impact of climate change are as follows. They are now having to adopt to carbon reducing business models. So essentially, they're having to switch to renewable sources of energy. Number 2, they're developing a dedicated risk management strategy that speaks to climate related risks. And the third one is they're creating contingency plans for climate change related vulnerabilities. Next slide, please. Natural catastrophes. Now, natural catastrophes ranked number 5 in Madagascar, number 6 globally, and number 7 in South Africa. Now, despite 2022 being yet another record-breaking year of natural disasters with insured losses in excess of $100 billion, the NatCat ranking actually dropped 3 places. But this wasn't a surprise again because there's a lot going on in the world. An example is we had the Ukraine and Russia crisis, the energy crisis, not only in South Africa, but the rest of the world. And we also had the fallout from the COVID-19 pandemic, which resulted in inflation and disruptions to the supply chain. As most of us are aware, in Africa, the insurance penetration is seldom above 1% of national GDP. The combination of low insurance penetration and a high hazard probabilities has ensured that NatCat remains a priority risk for most businesses. But for us insurers, the shortfall in protection represents an opportunity, which in the long run will help build more resilient societies. Ronald, please can you take us through the next slide, which I know is on critical infrastructure blackouts. Thank you.
Thank you, Senzile. Good afternoon, everyone. I'll be focusing on critical infrastructure blackouts, then also business interruption, and also I'll look at political violence. From the survey, what we've seen, critical infrastructure blackouts has been a new entrant. In South Africa, it's actually number 1 concern in terms coming from our clients. We have to look and see what is critical infrastructure. So the 4 essential critical infrastructure services which we see, which we know are utilities, there's communications, there's transport, and then also water. And I think these days when you talk to not even companies, but also individuals, it's good to know, people airing their concerns. Why is it critical, to talk about this critical infrastructure? It's because of it actually brings, services to a halt. I mean, you can imagine if you have a, grid failure collapse, what would happen? I mean, the entire country would be a blackout, there'll be no electricity, business will not be able to operate. If we were to have a water crisis, what would happen is companies that rely on water, definitely there'll be an impact on them. Communication, if mobile operators were not able to operate, that would also become a big problem. So it is very important, that we look at protecting, the critical infrastructure. So if you look at it from the slide here, the critical infrastructure blackouts of South Africa, as I said, they top, the risk here in South Africa for the first time in South Africa from number 3, and they're now number 1. And as I mentioned, the concerns is about, the power failure disruptions, infrastructure. Also, when you look at from a transport side, you look at the roads, the bridges. We saw with the 21 July civil unrest in KZN, there was a big issue when it came to logistics, how we were going to move, basic goods out from, KZN with the big ports and distribute them throughout the country. So definitely critical infrastructure is a big concern to companies. In Ivory Coast, it came at number 2. In Cameroon, it came at number 4. And Madagascar and Namibia, it came at number 5. In Africa, it's ranked at number 8. And the Middle East is ranked number 6th. And more concerned globally is now ranked at number 12 and number 1 in agriculture. I think from a company side, what then has to happen is from our client side, risk managers have to start, looking how to build, the business to be resilient, especially when they look at these critical infrastructure blackouts when it comes to utilities, water, communication, and transport. What we're seeing is, risk managers are looking closely, at the insurance policies, reviewing the policies to see if this type of cover is available. They also look at, business continuity plans to see how tight they are, to see in terms of in the event of a certain event happening, obvious how they can mitigate that particular exposure. Can you move to the next slide? Yes, so business interruption is the second risk in 2023, and this is in 2 consecutive years. And in 2022, it was number 2, and in 2021, it was in 2023, it is number 2 again. I think one has to understand, why is business interruption a main concern, when it comes to risk managers. The reason is because it's associated and aligned with profits and revenue. If you have a business interruption loss, it means the company cannot operate, resulting in millions and billions of dollars of losses being suffered. But also, if you look at from a supplier chain in terms of disruption, if there's a disruption in terms of the supply chain, that again will have an impact on the business. It was also number 1 in terms of 9 countries, including Cameroon. In Ghana, set at number 2. In Africa, it's set at number 3, and Middle East, Morocco, and South Africa. One would have to look at in terms of what are the main causes of business interruption. I think historically we knew of the traditional perils such as the fire and explosion, but what is an interesting note, cyber has become the most biggest cause in terms of when it comes to BI losses. I mean, if you ever have a cyber attack on mobile operator, you have a cyber attack on a financial institution, you could just imagine in terms of the millions and billions of dollars that could be suffered. Also from a if you look at it in terms from an energy crisis as well, where if you look at the current energy crisis going in the world, that does have a big impact in terms from a business interruption. Also, if you look at it in terms from an energy crisis, the fact that the pricing of your goods then go up, so it has a cost implication. You now need to actually cater for alternative sources of energy, meaning the cost goes up, then that eats away in your profits. Natural catastrophes are also at 31%, which is also a major concern. We saw with the Hurricane Ian, we've seen with the floods in KwaZulu-Natal. We've also seen the floods, the hail damages throughout Europe, the impact it does have on operation of business, which results, in the interruption of, the business interruption covers. And also, if you look at it in terms of the sectors that are mainly affected when it comes to business interruption, where they've got main concern, number 1 in chemicals, pharma, consumer goods, engineering, food, beverages, just to name a few. What we've been seeing now in terms of business interruption, if you can move on to the next slide, again, you find that, risk managers are now closely looking at, the covers they have, looking at, in the event of a BI loss from a cyber attack, is that covered under, the property damage, or do we have a cyber policy? So, risk managers are now paying more attention to say, look, we need to understand, whatever type of insurance covers we are buying, from insurers. And also when it comes to supply chain, trying to understand, you diversify in terms of business models. You also look at in terms of what alternative suppliers are there, whether they will be local, international, and also in terms of how you would actually move, different products in order to make sure that you have that profitability. I did mention again in terms of the most causes of BI losses, as you can see from the list there, where cyber tops at 45%, energy crisis 35%, natural catastrophe 31%, fire and explosion 30%, and supplier failure sitting at 25%. If you can move to the next slide, thank you. Okay, so the next new entrant is political risk and violence, which entered at number 10. In 2022, we saw, the political turmoil, in the world. I think the main in the news, which you saw was the Russia-Ukraine war. I think we saw the impact it had in terms of Russia-Ukraine, the energy costs, inflation, which has gone up, political violence. I think we've seen it, throughout. In 2021, we saw in South Africa the devastating impact we had, the civil unrest in July. At the moment, if you look at in Europe, if you look at in France, you look at in England, there's the protest, the civil unrest, and what we find a lot of times is they'll tend to target, again, the critical infrastructure. You find that flights are not available. You find that, the trains are not available. So, this is what we're now seeing, and that's why it's very important, when businesses have said, look, they believe that political risk and violence are now a big risk and threat to the organizations, because they realize that whenever a certain incident happens, it does actually have an impact where they have to either shut down the close, or even, as I said, when you saw the 21 July civil unrest, when in Durban, we saw a lot of businesses that were actually damaged, and the impact is still being felt. We saw obvious where many businesses have to be closed. We saw people losing jobs. Also, that then has an impact in terms of livelihoods of people. Much ranked higher in Madagascar, is sitting at number 1, in Nigeria number 2, Africa and the Middle East 4th, Burundi number 4. Number 1 in aviation, political risk. I think we've seen, with the Russia-Ukraine war, how it does affect, and especially if you look at, companies that operate in this particular sector, how they are affected whenever there's a war. Aside from war, companies also concerned about increasing disruption from civil unrest, as I mentioned, is the cost of living that bites in many countries, and also coupled with inflation. What we have seen as well, again, on the insurance side, when you look at risk managers, clients, again, it's focusing on what they can do to mitigate the losses. As you can see, there is the traditional political violence insurance cover. We at Allianz also offer this type of products where there's terrorism and sabotage, strikes, riots, civil commotion, water and damage, civil perils. And in addition to those coverages, we also offer terrorism, liability, nuclear, radiological, active assailant, and cyber terrorist. Thank you. If you can move to the next slide. Yeah, and some of the global trends, as we mentioned, if you look at here in terms of it's where trying to reduce the threat of property damage. So a lot of risk managers are working with that. How do you reduce the threat of property damage? One has to obviously understand, the political landscape. Also, one has to understand, the country, from a macroeconomical, social condition, how it is. Also to increase low intensity, high frequency. Irrational terrorism focused on loss of life, no end to goal. In terms of SRCC, which is strike, civil commotion, there are a huge range of topics which are leading to SRCC. I think what we're seeing is you'd have, a group of individuals in a certain country, either they're not, happy either with, the government itself in there, or you'd have labor unions, and these people would come up for a certain purpose. It could be political, it could be non-political, but of course that's how these events come up. And also, in the media, this is fueled by that. But also, as I said, being fueled by very environmental, economic, ethnic, cultural, political factors. From a war and civil war, I think what we saw with the Russia-Ukraine, where there was a conflict which was there in terms of why they went into war. And we've also seen, the impact it has had. And also, if you look at the likes of Russia, China, Saudi Arabia, where we still continue to see, wars and conflicts which are there. Thank you. We can move on to the next slide. I think, yes, that's me on my side. I'll hand over to you, Ludovic. Thank you.
Thank you, Ronald. So, I think it's time that we open up for question and try to give some answers. Maybe one thing that I wanted to say as a conclusion is this idea that I think the mega shocks we've had, the COVID and then now the war in Europe, have been creating an even more sense, an even stronger sense of awareness about the risk management and vulnerability management, as in pre-existing conditions and coping, rather than focusing, on risk or predicting risk. I think the boardroom has been focusing on discussing those gray rhinos instead of spotting the black swans. I think it's very important to keep that in mind, because we're going to have more of these wars, the war against climate change, the war against the demographic transition. We have a bit more interventionism, a bit more fragmentation and polarization, and a lot more inequalities. And so for me, I think what is also very strong here is, we can discuss the ranking of some of these risks, but I think there is a definite change in regime, if you will, in the ability of structuring the risk advisory and the risk transfer in a different way. Now we see that we reach this tipping point when it comes to how much they can affect the corporate sector, and how much they can affect the overall business environment. So without further ado, I think it's, I will hand it over to Thusang or Lesiba or Olivia to manage the Q&A